Hello, my name's Chris Willaton. I'm the Chief Investment Officer of Akambo Financial Group. I'm joined today by Graeme Quinlan, the Chair of the First Financial Investment Committee, and we're here to give you our take on what's been happening in markets over the last several days.
It has been a fairly spicy period in markets the last week or so, and for a good period of time, really since COVID, we've had strong markets and relatively benign volatility, notwithstanding inflation around 2022. But really, this time around is the first time we're seeing some genuine volatility as a result of major disruptions to global trade.
Yeah, look, the degree of volatility is a function of the uncertainty, Graeme, that's been coming through. The uncertainty around what the responses from different countries are going to be to the Trump administration tariffs, the response from consumers, from businesses, and the impact that might ultimately have on economic growth, which feeds into share market performance.
We would argue that markets weren't cheap to begin with as we entered into this episode. Investment fundamentals that have served us well for years and our long-term view of markets make our decisions a lot clearer and a lot easier to make.
Yeah, it's important to note, Graeme, that 10% fall in markets might be a great opportunity to be investing more, but a 10% fall in markets could be setting the stage for deeper implications in markets and further declines. And at this point, we don't know whether it's a good buying opportunity or something with which we need to be positioning ourselves more defensively. Now, that said, we have been positioning more defensively in recent months, increasing fixed income exposures, reducing exposure to some of the more, let's call spicier valuations sectors. And that's put us in reasonable stead in recent weeks as this volatility has really hit the markets.
And this is something that we do all the time. Back in November, we thought that it was time to trim some profits. We knew that the geopolitical environment was pretty uncertain, but it was certainly not that necessarily that drove our decisions. It was more based on good long-term fundamentals. And we'll continue to do that because we know that through other bear markets in the past, whether it be all the way back to the GFC, through to the European debt crisis in 2012, China demand falling off in 2016, or COVID in 2020, we know that this investment strategy, which focuses on the long term, has served us well.
It's important to appreciate when we see this degree of volatility in markets that there's always a temptation to run to the hills and cash up, but the reality is that often the best times in investing follow some of the worst times in investing. And if we hark back to 2022, we saw markets fall quite sharply, quite quickly. Don't forget that markets wouldn't fall unless there was something to be concerned about. But when they fell quite sharply in 2022, if you bailed out then you'd be missing the next 10% rally. And what we've seen subsequently over the last 24 months is an even stronger rally in equity markets.
So what does all this mean in the end for how we manage through this and how we manage portfolios? While this time is a little different to others, we know that there is a tried and true way to manage through difficult times. And we've done it in the past. We'll be here with you through the journey. So there will be communication from us to advisors and communication from advisors to you through this whole period.